Fantastic. Good question. So my career has kind of always been about creating solutions for banks and sort of selling those solutions into the bank to change the way that they operate or to improve the customer journeys that they support. I think over the last 20 years, we've moved through different phases from selling data to selling technology to the advent of sort of SaaS-based solutions. And I think over the last 5 years, we've certainly seen a change in the speed in which software is generated, right, with the advent of AI. Now, I saw that firsthand, kind of working in B2B SaaS, selling it into banks. And I saw it from two sides. I saw it that the banks and the lenders were getting quite terrified that the space was moving on without them. And they were becoming sort of these giants that were getting left behind, and no amount of hiring, no amount of investment, no amount of kind of transformation program was going to change the fact that they were losing market share. So I started to look forward towards sort of what comes after B2B SaaS, and what are the partnership models that a bank might look to capitalize on with fintechs at the heart of what they do. So that sort of led me to meet two other people that were crazy enough to start the business. A tech co-founder, an ex-banker, myself, who was obviously looking at a very experienced in sort of selling solutions into banks. And we got together and we said, look, the best way to solve this is to create a fintech and make that fintech partner with the bank. Now, if you got that model right, and fintech bank partnerships, if you can make that right, take all the good things about a bank, like their balance sheet, like their customer base, but build a completely next generation fintech outside of that, it's about bringing those together to solve a problem. And the problem we landed on, based on our skill set, was about getting working capital to businesses. Banks historically were pretty good at this through the provision of overdrafts or specialist financing products or really complex products like invoice finance. And again, over the last 10 years, they've been challenged massively by new fintech entrants or alternative finance providers that have come along. So much so that in the UK, now 40% of SME lending is done by banks and 60% is done by fintechs and new entrants. So we wanted to kind of capitalize on that bank fintech problem and also try and solve the working capital problem for SMEs. And we thought that the whole process was about combining some of the factors of secured credit with the ease and simplicity of unsecured credit. So essentially what we come up with is, how do you take a product like invoice finance, which is based on kind of tangible collateral of a business, and actually inject that into an overdraft? And that was the hypothesis. Could we do it? Could we use modern technology like banking as a service platforms to create an account infrastructure and to move money? Could we use advanced analytics and AI to generate the best risk engine to solve that? And could we use kind of open APIs to not just pull data out of external systems, but to push it back? And that's when we came up with the concept of the flexible trade account, which essentially at the heart of it is a current account with payments capability within it, but it's deeply connected into the business operating systems to pull out collateral like receivables in real time, make an assessment using AI and advanced analytics about whether we would lend against that collateral, and generate essentially a limit that looks and feels like an overdraft and let the customer interact with that. So early signs, what we've got is customers that would previously only maybe get a £10,000 overdraft and weren't eligible for any of the specialist products. We've now upgraded them to maybe a £30,000 or £50,000 overdraft using this new flexible trade account. So the businesses are left with much greater forms of working capital secured against collateral that sits within the business rather than personal guarantees and putting their whole life on the line to do this when you've got really good assets there. And the banks are incredibly happy because it's a really safe way to deploy their balance sheet. It's quite lucrative in terms of the money that they can make back on these deals. and most importantly, it's secured against assets that they know if something went wrong, they've always got sight of them, so they can always go and collect the funds. So the flexible trade account is just that. It's we think the perfect product for a growth, or the perfect product for an SME looking to grow, but also the perfect way to deploy balance sheet for the bank in a really safe, secure, and modern way. So over the last 10 years, what we've seen is kind of a massive influx in what's typically called B2B SaaS platforms, right? Technology platforms that are purpose-built to help banks or lenders to transform. And what that typically means is you go in as a tech provider, you sell the solution on a subscription basis, and maybe a year, 2 years later, after you've gone through the configuration and implementation phase, you start to see the benefits of that solution. Now, I think that's a completely outdated way of doing it. And what's really unique about what we did was to create the Fintech, a full stack solution with a service around it, so that we could turn up to the bank almost with a proven solution and customer feedback built in, and really demonstrate to them that we've created a solution that is right for the customer, not a solution that is tailored and configured or customized for them. Now, the benefits of that is we can literally plug in and start receiving referrals of customers almost immediately. And we can start to demonstrate back to the customer, back to the bank, that their customers really want this solution. And I think that's what's really unique about historically what fintechs did, but fintechs did it to compete with the banks. What's unique about how we've done that is we've created a SaaS solution, but we've applied it to customers and we're bringing those customers to the bank. We're not competing with the banks. We want to partner with them. So it's B2B SaaS on a partnership model rather than just a pure sales model, which is a different go-to-market motion. Yeah, so one of the biggest challenges that we face is in order to kind of deliver this overdraft-like experience, we had to go and get regulated. There was a small firm who was 12 months old, going to the FCA and sort of having everything ready and mature enough to demonstrate to them that we were ready to be regulated for payment and account services. As a small team, that was a challenge anyway in terms of capacity, but it helped to focus the minds on who we're hiring, what the founding team looked like, the level of, I suppose, maturity that we wanted to embed within the business, whether it be applying for our ISO certificate and getting all of our certification in that area, whether it's kind of internal policies and processes which are connected to that, whether it's bringing on legal folk, compliance folk to support that. That was a big challenge. You know, almost 1,000 pages went into our application with the FCA. Now, what I would say on that side, timing is everything in fintech, and we were really, I suppose, opportunistic in the fact that the FCA was looking to relaunch their regulatory sandbox, which was a sandbox set up for new innovative firms like Bourn to test out new solutions. So it was almost the perfect landing place for us, is to get into the regulatory sandbox. The FCA had a new focus on innovation and growth, basically being pushed by the government to sort of not be a barrier and to sort of help firms like us to unlock, in our case, SME financing. So when we did enter the sandbox, actually we were met with open arms. There was a huge amount of interest in what we were doing. Obviously, the kicker was that within the sandbox we were bringing banks to the conversation as well. And again, the sandbox was there to give the banks, existing regulated parties and new players like Bourn a really safe harbour to go and test out new solutions. So yeah, we flipped that key challenge that could have been a real kind of limiter on the business into an opportunity, and used it to get the banks involved, used it to drive the FCA's agenda. And we were not just accepted onto the FCA sandbox, we're now in it, we're piloting with the live customers, and we are kind of well on our way to being fully authorised as an EMI. My advice for any founders sort of starting on this journey is to do your research. You know, pick a real pain that has not been solved yet, and assess the complete market, who's done what. Really look inside yourself to say, actually, are you the person that can solve this? Don't just go after any pain point. I think you should feel like you're uniquely qualified, either yourself or your co-founders, to go and solve this problem. But when you come to kind of asking for money from people, that will be the key thing that they look at. They'll look at you, they'll look at the pain that you're solving or the problem that you're looking to solve, and they'll look about the combination of those two factors and say, why are you uniquely positioned to solve this? Now, if you can't get those kind of 2 or 3 things right, it's not worth going on the journey. Now, we work obviously in the space of working capital. We always knew we were qualified to do it. I was just very, very lucky enough to end up with 2 co-founders that I'd known for 15 years each. And we'd never worked together, but you had a banker, a salesperson, and a tech guy. So we looked inside ourselves and we said, we are uniquely positioned to go and solve this with our experience. And I think that came to fruition when we went out to raise our first funds. It's come to fruition now when we're raising our second fundraise. But yeah, my advice, big time from a founding perspective, is qualify the problem that you're solving and assess whether you are uniquely placed to solve it. So luckily, this is the second time that I've worked with Aperture. So I worked with Aperture in previous company, Trade Ledger, and again, it was kind of the same situation. Early stage company, we had some skills, and I have some skills in the world of marketing, but predominantly on the sales side. As an early stage startup, you don't want to hire a whole marketing team. So what you know you're going to get with Aperture is a team of experts. You're going to get a professional marketing lead like yourself, who come in and take your vision and translate that into a strategy. But you always know that you've got a team of people underneath that to support you, whether it's graphic designers, whether it's website experts, whether it's product marketeers. And as I said, this is the second time I've done it, so we must enjoy it. It must be good. It's fun, you know. It's nice to have that team of people that are sat alongside you that have got the experience of working with other fintechs. They bring that experience. And from my perspective, it's always fun to throw new opportunities back at Aperture and see how they land, see what you can learn from them, and see how Aperture can kind of adapt to everything that's going on in the marketing world. So yeah, it's a hell of a lot of fun. It's incredibly fast paced, and it's insightful in terms of getting that full market coverage about what's going on in the fintech space.